Gold's price has reached new record highs yesterday at $2,353 per ounce. Today we are to discuss the main factors which could affect gold's price fundamentally and conclude the report with a technical analysis of gold's daily chart. Given the negative yet currently asymmetric correlation of the dollar with gold's price, we still see the case for a possible strengthening of the greenback to weigh on gold's price and vice versa. Hence, we highlight the release of the Fed's March meeting minutes on Wednesday. Should the document show that the Fed policymakers are hesitant to start cutting rates, it could provide some support for the dollar and at the same time also weigh on gold's price. Also, the release of the US CPI rates for March on Wednesday may be the next big test for gold's price, and the possible failure of the rates to slow down or even a possible acceleration could add pressure on the Fed to keep rates high for longer and thus provide some support for the dollar and weigh on gold's price. Also, please note the competitive nature of US bonds with gold as safe haven instruments. US bond yields are at a higher level since our last gold report, which should normally be weighing on gold's price. The pre-mentioned behavior of US yields can be observed for the 2, 5, 7 and the 10-year US bond in a sign that the attractiveness of US bonds is falling. Despite the decoupling of US bond yields and gold's price, should US yields continue to be on the rise in the coming week, we may see investors' attention turning away from gold as the precious metal is non-interest bearing, thus clipping gold's gains if not setting its price under pressure. At the same time, we note that geopolitical uncertainty remains high as tensions rise. In the Gaza war, we note that the expectations for a possible counterstrike of Iran after Israel hit its embassy in Damascus, Syria, killing 6 people. The war in Ukraine seems to have taken a turn in Russia's favor, as its nature of attrition seems to allow the military superpower to have a better chance of winning it. In the South China Sea, worries for China seems to be rising, and tensions between China and the US seem about to escalate further. Also, tensions in the LATAM area may escalate further in the coming week. Hence, we may see uncertainty in the market rising even further, which in turn may provide some support for gold. We also note that the rise of gold's price may have been instigated by a bandwagon effect, with speculative buying being on the rise, thus providing support for the precious metals price like a self-fulfilling prophecy. Also, central banks are reported to continue keeping gold purchases at high levels, hence central bank gold buying is emerging as a key driver of gold's price. Characteristically, China's central bank added gold to its reserves for the 17th month in a row in March, according to Wall Street Journal. Also, other central banks are reported to increase their gold reserves, and should that tendency be maintained, we may see gold's price getting further support. Gold's price reached new record highs yesterday at $2,353 per ounce, yet today's price action seems to have broken above yesterday's high, turning it into a support level. Hence, we maintain our bullish outlook for the precious metals price, as it seems to maintain its movement within an upwards channel, with the lower boundary serving also as an upwards trend line. Yet the price action seems ripe for a correction lower, hence we tend to issue also a warning for a possible correction lower. For the bullish outlook to be maintained though, gold's price will have to form new record highs, which implies that some distance has to be placed between gold's price and the 2,353 support line, and we set as the next possible target for the bulls the 2,400 resistance level. For a bearish outlook, we would require the precious metals price to reverse direction, break the 2,303 support line and the pre-mentioned upwards trend line in a first signal that the upwards motion has been interrupted, and continue lower to aim or even reach the 2,250 support base. Thank you for tuning in to our financial news. From all of us here at IronFX, we wish you a solid trading.